to money supply crashing, doing something it hasn't done in 90 years and only a few times in the last 150 years. We need to talk about the frozen housing market, and we should probably talk about the economic expectations for next week. Because again, I think we are living in a world where bad news is bad news and good news is good news, right? This is very different than it was the last year where we were saying bad news is good news. Now I think it's, yeah, the economy is slowing down. All of that is kind of where we are going. So, you know what, let's talk about the economic expectations first. I have a couple of numbers that we should look at. First comes out on Tuesday. It is the JOLTS report. You and I can refer to it as job openings. So last month, it dropped, I think, 600,000, breaking the psychological 10 million number. Last month, it came in at 9.93. Expectations this month is to continue downward, getting us to 9.6. To me, I think the Fed wants it to go lower, right? I think the Fed would love to see another 500 or 600 come off, so we're talking 9.3, 9.4. They certainly, now this would be bad news for the Fed, they don't want to see job openings go back over 10 million. That would be a sign of more to do. So that's the first one. Then on Wednesday, we get the ADP Jobs Report for April. It is expected to come in at 143,000 jobs created. This is often called private payrolls, 143,000. Last month, ADP report was 145. Again, to me, I think the Fed wants to see that number come in lower. I think staying close to 145 would again be a red flag. And again, certainly they don't want it to see higher. So that would be the ADP report. Then on Thursday, obviously, or on Wednesday, then we're going to get the Fed rate increase. We're going to get that, it's baked in the cake, 88% odds, something like that. To me, it is going to be it's going to be the press conference. I think the data heading into the press conference has generally been bad, certainly on the inflation front, right? We had core CPI break trend. We had PCE core also come in hotter than expected. So I expect Powell to be a hawk. And if the jobs numbers come in hotter than expected, he might be a big hawk. But again, as I've shared, my current thesis is the economic data gets really weak in the middle of May because we will see what happens from the banking crisis. So that will be Thursday. And then Friday, the big number of the week. The big number is the jobs report for April. Non-farm payroll, it's often called. Last month was 236,000 jobs created. Expectations are for 180,000. Again, that's a pretty big slowdown. Right, what is that, like 20%? Again, I think the Fed wants that to come in lower. Certainly doesn't want to see it go up. So this will be a big number. They are anticipating the unemployment report, or unemployment rate, excuse me, to go up to 3.6 from 3.5. Still a historically low unemployment number. So again, lots of job data. We'll have some wage data in there as well. We have a Fed meeting. Again, I think the tone and tenor from the Fed will be higher for longer. I don't see a change. It will be interesting, going on to topic number 2, if First Republic gets taken over by FDIC today, right? We've heard about an auction with PNC Financial, JP Morgan, and others. If it goes into receivership and then gets chopped up and sold for parts, what will that do? Will Powell talk about that? Because that's, again, was a very big institution. Again, they will say, hey, it had its own mismanagement and all of that. But does that tighten credit more, right? Again, something we shared about the event, the multifamily event. Again, shout out Jonathan Twombly and team for putting that on. I was astonished to hear over and over again that two things. One, there's general agreement that good loans, right? Because again, commercial has terms 3, 5, 7, 10. Good loans, never miss payment, are going to be forced to refi somewhere else or sold. Banks need cash. So again, it was interesting to hear operators acknowledge that. And then second, will banks get even more nervous if we have another significant institution like First Republic go out? What is the ramifications? And the only answer I can think of is, heck yeah. Lending standards are going to tighten up. We're going to continue to have this sort of battle between existing owners / sellers and buyers. Transactions in the commercial space are down 75, 77%, depending who you hear. So I don't see that getting better, but watch those refi dates because again, they're talking about 1.5 trillion in the entire commercial market coming due over the next 12 to 15 months. So definitely a place to look at. So again, something I will be watching. So First Republic, I do think goes out. I've thought that for a while. You can't lose $100 billion in client deposits and not go belly up. It'll be interesting to see. I think the powers that be would like First Republic to go to PNC. I think there's a general understanding that they don't want it to go to the big banks, right? I think going to the big 5 or 6, including JP Morgan, is not an ideal result, so we'll have to watch for that. But maybe JP Morgan's the only one bidding, so we'll have to watch that. Other things going on, Redfin is posting some data about housing. Listings are still down 20%, and we're really soon to be leaving the spring selling season. Typically, the spring selling season, roughly, it does vary by part of the country, but usually by Mother's Day. So we are a few short weeks away from being done. Redfin is reporting that 50% of properties that are listed are in contract in under 2 weeks. Think about that. That's still moving pretty fast. Again, we are very low on supply. Demand is obviously hurt by affordability, but if you take supply down more than demand, you still have a pretty interesting market. If First Republic goes out, I'm really concerned about commercial lending and refis and things of that nature. I'm really happy that you came along for the ride a year ago, maybe, when we refied all our debt. So, but yeah, there will be people who operate a building, never missed a payment. The bank says, I'm sorry, we're not refining, you must cash us out. They will then go to refi somewhere else. One, they may need to perform a cash-in refi. It's not something you hear very often, but basically a cash-in refi will mean, hey, you've got to bring $50,000, $60,000, $100,000 to the table for us to do this loan, right? Reduce the LTV, things of that nature. It's going to be painful, and some operators will not be able to refi, and it will be the debt that forces them to sell. They don't want to, they never missed a payment, but they can't replace the debt, and they will become forced sellers. It is coming. Read some articles about Amazon's earnings, and apparently in the conference call, I think it was the CFO was talking about the US consumers' spending habits are changing. You and I have talked about this, I think, for 6 or 9 months, right? We're no longer getting cardboard boxes shipped. We are doing experiences, whether that be eating out at restaurants, going to Vegas, such as I am, or taking some travel and trips, right? We heard from United and Delta and American about summer bookings. We've seen reports from hotels and things of that nature. So again, I think we've bought enough stuff over the last 3 years, and now we are doing some experiences. So UPS, United Parcel Service, I think I said that wrong last week. Thank you for the correction. Disposable income, again, is shifting from stuff to services. So it's kind of a validation. The question about the housing market, I get asked about this a lot. Obviously, I see a housing market that is flat. I think the question you should ask yourself, if you too want to look into the future, this is what I would ask you. I think if you want to talk about housing December of 2023, so let's call it 7 months away, I think the questions you should answer is, where do you think rates are? Because I think the mortgage or the housing market is very different if rates are 7% versus 5.5%. Right? That's the first thing I would think about. And then the second thing I would think about is listings. Are we still down 20% year on year, right? When they compare week to week, have we seen an uptick? That would be number two. And then where do we at days on market? It is possible that listings come down, inventory to stay relatively flat, and days on market to expand. That would be showing a demand contraction. So again, I think the housing market is in an odd space, right? I obviously think we're heading into a recession, a slowdown. It's a slowdown from a decent rate, right? Again, especially when you look at employment, which is expected to be 3.6. You know, I haven't changed my opinion. I think the 30-year mortgage is under 6 at the end of the year, and I don't think sellers are selling. I think active listings stay below trend, and we kind of bounce around 4 million transactions for at least another year and probably 2 years. But you know, if you were going to tell me that, hey, Mike, I think interest rates will be 7.25, and I think inventory is going to explode, I think your answer for the housing market would be different than mine. But those are the things that I think about. There is an economist, a bank senior economist, Abby from PNC. She thinks rates are going up, and she sees housing dropping 10% this year. So if you wanted to read that, I didn't write down her last name, Abby, PNC Bank senior economist, which I thought was interesting. And she's basically saying rates are up and tighter lending was her thesis. Robert Frick, corporate economist, Navy Federal Credit Union, was quoted. He's saying that it will be a torturous process to unfreeze the housing market, and it's going to take a long time to get supply and demand in balance. This is exactly my thesis that I put out, I think, a year ago, right? Transactions will crash. They're going to be kind of flat for years because the Fed broke housing. Too many folks have low interest rates. We either purchased or refied into these rates. They're now an asset. You're not moving. You're certainly not moving when one life event happens, but maybe you move with two. So I think we stay in our homes longer. I think lots of folks won't refi. I think the second mortgages will become a thing again. But yeah, I think Robert's right. I think there's a lot of people that just want this, up, down, and we're just going to be plateauing for a while. But in the end of the day, that's always a deal out there. Please get a buy box. Please look every day. All of you inspire me doing the work. When you send me a note that you closed the deal, I am so happy for you. Let me make sure I don't have anything else. Oh, M2 money supply. Let's talk about that. M2 money supply. Okay, what is that? So M1 is simply said it's actual currency, right? It's physical cash, coins in the economy. M1 is not that interesting, frankly. In an economy that's debt-based like we are, M2 is far more interesting. So what is M2? M2 is obviously all of M1, including savings, money markets, I think CDs under 100 grand. So it's basically money that we can get to, but we need to, it's not quite cash. So that's what M2 is. And what's going on with M2 is gone negative. This is something that hasn't happened since 1933. And if you don't remember 1933, let's just say it's not a good time in our economy. M2 has gone down. Now, I think this is by design. I think what we just need to realize is we pumped, I don't know, I hear all kinds of numbers. 6 trillion, 8 trillion, 12 trillion, whatever the heck it is. We pumped so much money into the system, we now need to get it out. One thing I am interested about M2 is I do not believe, because again, it's basically cash and then credit, for lack of a better term, is it doesn't count things like gold. It doesn't count things like crypto. I wonder how much is going to other alternatives. At least in my adult life, there's been a lot more focus on alternative investments. We just had a banking crisis. We just saw deposits flee banks. I don't remember the number, but it was 20 or 30 billion dollars kind of unaccounted for, right? Little banks to big banks somewhere else. All of that. When I tried to tie that out, it's like, hey, where'd this other money go? I wonder how much is just sitting in crypto wallets? How much is sitting in gold coins, silver? I bet you it's more than you expect. I bet you. So again, I think part of why M2 has gone negative is the other assets, but it could be painting a bigger picture, and I think it's by design. I think we have to see M2 reduce given how much money we pumped into the economy. It's kind of by design, I think. So it's a lot of stuff going on, folks. It is Sunday, April 30th. I hope you enjoyed this. Hope you're having fun. We've got a couple more days here. All right, folks, take care of yourself. Have a wonderful day. Like, subscribe, comment, become part of One Rental at a Time. Hey, Chester, thanks for your comments. Take care, everyone. Bye.